Will 21 million Bitcoin really be able to host the entire human race? El Salvador has already made it its legal tender. So Bitcoin and Satoshis will be able to host the entire human race?
It's a one-function coin, one-function crypto to me, and that is store value.
So you could see yourself paying bills in Bitcoin?
Well, cryptocurrency, yes. In 1 month, they have printed $1 trillion more.
1 trillion with a T.
With a T in 1 month.
But with inflation rates going up, the cost of living will go up naturally. Will people have to now convert their cryptos into fiat to pay for those higher cost of living? The IMF, International Monetary Fund, recently published a report titled Taxing Cryptocurrencies. Should cryptos be taxed?
Yes.
Why? Access to your personal money. That's the most scariest thing. Will it kill financial freedom then? Welcome back to another episode of the Traders Brawl podcast. Traders Brawl is a social media marketing agency hosting this podcast. For those who are new, welcome. I'm Adel Burton. I'm the host, and I'm joined here with a special guest, Pekka Kelkka, founder of Papa Blockchain. Welcome, Pekka.
Thank you so much, Adel. Great to be here.
Thank you for being here with us. A reminder that this is an educational podcast focusing on emerging technology, such as, but not limited to, blockchain, cryptocurrencies, artificial intelligence, AI, and the next evolution of the internet. Papa Blockchain, the name is very, very catchy. And you are a Web3 educator in this space. And I thought it'd be great to have your thoughts on the topic of are decentralized cryptocurrencies really a store of value? But before we get to that, what have you been up to recently?
Well, let's go a little bit further back. I started my first career on blockchain crypto 7 years ago when I came back to when I came across with the Ethereum white paper, and my background is from I come from enterprise software world, and when I realized that there is this application and platform that will remove the unnecessary middlemen from the transactions, securing the transactions in the most decentralized way, I really got hooked up with the idea. So 7 years full-time on blockchain cryptos. Last 2.5 years, 2.5 years ago, projects start to ask me to join them as an advisor. And ever since, I've been a full-time advisor for the early phase blockchain and crypto projects.
Very nice. That's good. So you developed a lot of knowledge in this space over the years. And right. When did you make the move? I'm assuming you made a move from crypto from banking and being unbanked to being fully in crypto.
Well, banking to me is like I have a bank account. That's only a relationship with the bank. But and sometimes I had loans, but not in many years. But so again, it comes from this enterprise world and how the blockchain cryptos can enhance the mechanisms, decentralization can enhance the procedures and mechanisms on the enterprise environment, software environment. And that was my starting point. Of course, cryptos come to the picture because of there's a role on blockchain, depending on what blockchain is about, the different roles. One protocol, one consensus mechanism there is called proof of stake, which means that those transactions will be not validated if there's no coin and token on the platform. So coin and token, they have a incremental part of the ecosystem. So which means that you cannot separate, when it comes to entire ecosystem of blockchain, you cannot separate token, coin from the blockchain platform itself.
Right. And at the moment, just a personal question maybe, are you fully in crypto? I mean, you have a bank account indeed, but are you being paid in crypto, and do you is that your preferred method of being paid?
Well, yes, I prefer to use my wallet, receiving tokens and coins in a wallet, yes.
Is it because of the decentralized nature of it, or the fact that banks cannot have surveillance over what you're earning, where you're earning, when you're earning, things like that?
Well, first of all, my contract with the platforms that are developing themselves to be more decentralized all the time, that's based on paying me with the cryptocurrencies or stable coins, which is a mechanism to launch a fiat-backed token on the blockchain protocol. So that's the mechanism I have. But of course, I need to convert that at some point.
Of course. And that's great because I myself, I'm being paid in crypto. And I think my preference is that until I have to convert it. But the reason as well is because, I don't have to deal with any individual who knows my bank details. I don't have to tell them, or they don't have to answer to me when I send money to another recipient. Whereas with fiat currencies, if I were to do that, if it's a large sum and if it's random, they would flag it in their system and ask me and call me, asking me why are you sending this money?
Yeah, that's the case, yes.
And that's the case for me. Very nice. Okay. So for our audience, remember, we are an education podcast. We're here to educate, break down the jargon, make it for everyday people. Your name is Papa Blockchain.
Yeah, that's how they call me, yes.
What is a blockchain? Let's begin with that.
Well, if you compare the centralized IT system and decentralized IT system, centralized system are the traditional information technology ecosystem. Decentralized is opposite from that sense, that there's no central entity controlling anything on this platform, which is called blockchain. Blockchain is one of the DLT, decentralized ledger technology platforms, but most used. And that's why people are using the blockchain word as the generalization of this decentralized platform. But the principles of blockchain, there's actually two important words. One is permissionless and the other one is borderless, which means that you can join this ecosystem on different roles without asking any permission from anybody. That's the beauty of it. So there's no company, there's no organization, you don't have a CEO, you don't have anybody else. You just fulfill the conditions and terms what is there to join the platform, depending on what role you want to have in there. And that's totally permissionless. So you be part of the ecosystem on a role that you choose. And then borderless means that there's no border on transactions. This blockchain platform it's reachable from everywhere in the world. And that's the beauty of the system. And then when you build businesses on this kind of ecosystem, you have global business immediately if you manage to build a good community, good ecosystem, big enough ecosystem for yourself. And that's the key. Community and the ecosystem. All the successful blockchain mechanism systems, platforms, they have big communities, continuously growing and committed communities, and the ecosystem growing also in the same way.
Fantastic. Yeah, I really resonate. Permissionless and borderless. So borderless, which just essentially means there's no border that would restrict you from sending money from one place to another recipient. Whereas with centralized centralized currencies, there would be border concerns, and I suppose there would be exchange rates and things like that to consider. With cryptocurrencies, what is to be considered is gas fees. Some can vary depending on the blockchain, like Ethereum versus Tron. Massive difference for me, at least. And that's something to be considered. But permissionless also means that you don't need to have any central authority to issue you an account. You can just create a wallet at your own accord. Would you agree?
Right. One clarification. People who are new to this blockchain crypto, gas fee is nothing to do with the gasoline. Yes. It is a transaction fee. And that's coded again on the platform itself. Or there are some validators who actually can play with this and get rewarded on this gas, which is transaction fee again. And that's, again, decentralized. You can position yourself as a validator or node on the platform itself, and then you get rewarded by the token itself on the platform. And the transaction fee is called a gas fee. And as you mentioned, there are different mechanisms, different platforms with different prices on the gas fee. And you mentioned Ethereum. I'm a big fan of Ethereum because that's the first blockchain to me when I started this whole thing. But again, there are mechanisms to cut off, or not off, but minimize the transaction fee. There are some layers built on top of this big layer 1 blockchains like Ethereum. They're called layer 2 platforms that are functioning the way that they give more transactions per second, and they cut a lot of the transaction fee, the gas fee. And that's the mechanism that's building up fast now.
Indeed, yes. Correct. Great clarification there. It's a transaction fee. And by the way, there would also be transaction fees in sending cross-border transfers in fiat.
Well, yeah.
In addition to exchange rates.
Right.
Whereas at least here, there's no
and
exchange.
the banks and the people on the process, they can play with it.
Yes.
It's not on any kind of code, and that's the beauty of what we have. It is programmed on the code.
On the code.
Which means that you cannot change it, you cannot temper it. It's there.
And there's no human intervention when it comes to this. So that's another benefit, because I think we can agree that humans are corrupt naturally.
Well, that's if you have a power and you can decide. You get corrupt. You get
corrupted. You get corrupted for self-interest.
In depending on the level you are, some sort of corruption is there. But again, if you think it this way, that the you mentioned the who do you trust? We forgot one very important word. We said permissionless, borderless, trustless, which is kind of a little bit hyped word when they started this blockchain decentralized business. Well, to me 7 years ago, and with me 7 years ago. But trustless also means that if you understand the power of the code, and we who are in the scene, we call it code is law, which means that if it's programmed on a smart contract and it's tested, like the best smart contracts have been tested so thoroughly, and they've been hacked. They've been tried to hack like tens of millions or hundreds of millions of times without any success. But those are the most mature ones. And do you trust this kind of code, that there's no ownership other than decentralized platform? Do you trust this software, or do you trust your banker? So that's the interesting discussion dynamics if you think it this way. And then you can position yourself on the ecosystem again, the way you want to do it, and when you use it the way you want to do it, just to transact in the whatever value there is, or you can position yourself earning, for example, part of the being part of the ecosystem. Yes.
And just to build on that, as you said, you were a fan of Ethereum, the second largest by market cap.
True.
Ethereum is. Would you say it is centralized because it's by Vitalik? With that said, and when we say it's code, it's based on code, there's no human intervention. Critics could argue that still there was a human that created that code, and therefore it's still programmed in a way that was done by a human. What would you say to that?
First of all, I believe that all the projects, they need to have some sort of strong leadership.
Yes.
And even if we go to the mother coin, Bitcoin, well, Satoshi Nakamoto, who he, she, or they were or are, there are still some people who are in the core of developing it further. And there's a BIP, which is a Bitcoin improvement proposal, which means that every now and then they will publish this proposal to the community to enhance even the Bitcoin platform. Bitcoin is not the same today than it was 2009 when it actually the first block was mined, produced. So it's developing all the time, and there are people behind these decisions, and those people are most knowledgeable people. So again, but how they implement that on the network, on Ethereum, on Bitcoin, or any other platform there is, the bigger the community, the bigger the power is, then you cannot play around with these things. You need to give value to the community.
Yes.
And if you don't manage to give value to the community, it doesn't work. This will vanish from this decentralized world, this protocol.
100%. I think you're right. So when it comes to the fact that, yes, it's programmed by a human, if it's programmed in a way to create value, then there's a use case for it, as long as value is being created.
Yes.
So yes, it's okay that it's not decentralized, but that allows you to make upgrades and also value creation. That also leads, again, human corruption also in place. Because humans, if you have the power to change things, like you said, there's also room for that. But, I'm just leaving room for debate here because it can go both ways. Program it to do self-interest or programming to do for value creation? I think value creation, because they wouldn't want to create this for nothing and they want it to expand and grow.
If you program something for yourself, you yourself is enjoying it. Yeah. No one else. Practically, that's the end game. Yeah. But if you program that to the community, and community decides, and as well, just people who are new to this, again, we have the mechanism which is called Decentralized Autonomous Organization,
yes.
And that will grow fast. But the mechanisms are really raw still. They are not really good voting and decision-making mechanisms yet. But that's the future, because, as I said, and everybody who's in this business and decentralization, we know that community is the key, yes. And community needs to trust you as not as a person but as a software, yes. As decentralized ecosystem.
Yes. Speaking about building on decentralization, what is a decentralized oracle, and are there centralized oracles too? This buzzword, oracle.
Well, the decentralized oracles are much needed, really much needed. And the how it actually, and what's the role of decentralized oracles? I use the decentralized oracles because some people are using just oracles. Yeah. From clarification's perspective, I use the word, two words, decentralized oracles. Oracles, they are the mechanism that takes the data from centralized servers, data centers, centralized environments, and take it to the blockchain. Mm-hmm. And on the blockchain, there are a huge number of validators who are validating that the transaction, the data is as it should be. Mm-hmm. That's the decentralized mechanism. And again, sometimes it goes both ways. When it's proven that it's decentralized, the data is exactly as it is, mm-hmm. Then it goes back to centralized server to be used, for example, because we have some challenges still on scalability and these kind of things on decentralized platforms. So this two-way street, oracles will make the data, securing the data the most decentralized way possible.
So it's like a bridge between decentralized and centralized servers to verify and validate the information and data that is being sent either way.
And validation happens on blockchain.
Yes.
Decentralized manner. So there are people who are positioned themselves as validators on node. They run the nodes or validator nodes, and they use this. The data use this is part of this process of decentralized validation, and that's the beauty of it. And there are a lot of use cases now that most of the people don't know that actually it has gone through this kind of process of decentralized validation using the decentralized oracles.
So it's really good. For example, one use case that comes out of this is solving the counterfeiting problem, because it's been any information that has come from centralized servers or decentralized servers can now be validated to say this is a true statement, yes, or this is a true data.
Yes.
So things like, for example, let's say things like, just thinking aloud here, if a presidential candidate made statements that were false, could we take that statement and then verify it and see if that statement is actually true?
Well, that's the thing, because there's so much to do with the fake news, for example.
Yes, fake news.
Because who invented this word? I don't know. But
no, I'm not going to say it on here.
Let's not go to politics. But no. But the fact is that how the oracles actually, how they collect the data, as many data sources there is available, they do that. And then it goes to validation process and then securing that this is truth or not. And that's beautiful. But it's not just like this kind of news, which is much, much needed. Well, more needed by the end of this year when we're getting closer to the big elections in the US. But now the also financial data, that the value of whatever transaction, whatever asset it is it actually as it should be. Also, oracles are used inside the blockchain, for example, decentralized finance platforms, to secure the price feed that's always correct. And then like weather reports for the agriculture business. So that's used a lot now, that you can be sure that this is not tempered or changed, whatever the weather forecast it is as it should be, most accurate. And then you can do your decision what you need to do if you're an agriculture business.
Fantastic. So, and I think a really large use case, as we mentioned before as well, is solving, in addition to the counterfeiting problem, which is being exacerbated by AI, like deepfake and other platforms. We really need, you would agree, we really need decentralized oracles.
Absolutely, and just a little advertisement, if you don't mind. I just published yesterday on my YouTube channel, Papa Blockchain, Web3 Education channel. I published a short video concerning this particular thing. One of the major 3 risks on AI, and the risk that we have today with us already is the fake content on audios and videos, and they are. It's impossible. Just with the human eye, you cannot tell the difference, and you cannot hear the difference if it's AI robot generated or human generated. And now oracles come to the picture. For example, now as the regulators are thinking a lot now what kind of regulations we should have to secure and protect the people and make sure that you not be tempered by the fake whatever content that is generated by AI. Do we have to like stamp on it that everything that is like AI, it's a stamp on this particular content? But then again, that's not fair, because you may use the AI as a source generator of this content, and then you do give some human element yourself on top of that. But again, it's a different story if a presidential candidate speaks totally nonsense or whatever, and then you put that online, and people believe that it's real him or her talking. But if it's an oracle system there, it first of all it proves that the data source is that comes from human, and then it goes to validation process on the blockchain, and that's the beauty of it. And we need to have it now. We need to have it yesterday, actually.
We need it more than ever right now.
Yes, absolutely.
Because AI is only going to develop even further, making the accuracy and the lines to be blurred even more as time progresses. So that's a big concern, and I look forward to having decentralized oracles stamp and verify that the content you're watching is legit and correct.
Yeah, true. But again, it's impossible on Web 2 world.
Yes.
Because you can have your server anywhere. Everybody, you don't know where it comes from. And if it's on social media platforms, you just don't know the source, and that's it. But again, Oracle, decentralization of the data, securing that there's a human who's behind this content, that can be done today. So that's why I'm encouraging each and every AI platform now to start to research how to use blockchain technology, especially decentralized oracles.
Fantastic. Now, as we're speaking about decentralization, there should be a question around CrossChain versus MultiChain. There's a difference between those two, and in technical terms, there's CCIP, which is also another buzzword being used, versus TCPIP. So I want to ask firstly, what is CrossChain interoperability protocol?
Oh, well, it's an application software that has been developed by Chainlink. Again, one of my favorites ones, and it is a organization. It is actually the company, but CCIP role of the CCIP should be the same, or standardization of the transactions on blockchain between the different protocols should be standardized. All the transactions between the different blockchain protocols should be standardized for two reasons. Let's go back to a little bit of history. You mentioned TCPIP, which is TCP is the transfer protocol on internet, on Web 2.
Yes.
Is
that the exact abbreviation?
Yes, exactly. Okay. And that's used on centralized Web 2, and before that was actually launched and agreed. That is the standard that everybody's using on different browsers, whatever there is. You use TCP/IP. So standard is there. Everybody's using. You develop, and all the transactions will be. They use TCP.
When you say they use it for what exactly?
Well, it's a transaction protocol. It is a standard to transact.
To transact.
Transact on Web 2, and CCP/IP was developed on this thought in mind that we must have protocol that's standardized between transactions between different blockchain protocols.
Yes.
Cross-chain interoperability protocol is TCP/IP, and the idea is that there's a big risk always when transactions will happen between two different blockchain protocols. And we're using bridge technology. And how it functions is that you have a blockchain protocol A and blockchain protocol B. And you have smart contract which is tested, very well tested on your blockchain protocol A. But you need to change it a little bit to transact between A and B protocols. And that's the whole idea of CCIP. You don't need to change anything on your code because it's universal transaction interface, or it's a communication interface in that sense. So you don't need to change your code at all when you are transacting with another protocol. And it goes closer and closer to idea of Web 2 transactions, TCPIP based.
Yes.
If this will be a global standard, this or something else, but we need to have it because the bridge software, bridge applications between two or many blockchain protocols, I call them, everybody else call them, they are hackers' paradise. People are stealing money using this because it's really difficult.
Because of the change, that small little change, hackers use that as an access point.
Exactly, and that's a huge thing that needs to be. Everybody needs to understand that. Let's work hard. All the programmers in the world, do your best to analyze if CCIP is the one that actually can solve this problem. This used already on many protocols and many platforms today, also from the traditional world, and connecting that with the blockchain platforms. But we need to have this. And that's one of the major things we need to develop ASAP.
The standard creates seamless transfer of data, and that means again removal of hackers coming in to steal data and also take advantage of it. Critics might argue that while it may not be interoperable, they maintain sort of competition in the sense that I want everyone to be on my blockchain network, and I want to be the best blockchain network as per capitalism. What would you say to critics who say that?
Yeah, there are these camps, and the biggest difference between camps are that those that this blockchain needs to be like silos, and those guys don't. I don't believe that blockchain will ever reach its goals to be Web3, and because Web3 should be the next big upgrade of internet from Web 2 to Web 3. Yes. And if we cannot have more than one internet, so that's why we need to have seamless transactions between different blockchain protocols.
Mm-hmm. And the same goes for metaverses, because there's many different metaverses. And how are you going to transfer my avatar from metaverse in Polygon to metaverse in Ethereum, for example? How will that work? Or Sandbox? I have to change something. Or it's at the moment, we don't have that interoperability yet. We don't have that bridge, that sort of teleportation that allows you to transfer this. You either are on this metaverse or you're on that metaverse. You cannot have the two.
Yeah, and the whole idea of CCIP, CrossChain Interoperability Protocol, is that there's an interface, this universal interface that takes care of this transaction, completing the transactions the most secure way. And if this will be the global standard, we're there.
Yeah, that will solve the interoperability problem for metaverses as well, in the same way. Fantastic, really good. Let's turn our attention a bit about cryptocurrencies now.
Okay.
So people often say the buzz phrase that cryptocurrencies like Bitcoin are a store of value. What do they mean by this, firstly, so that the audience can understand what the store of value mean? And then secondly, as we know that there's 21 million Bitcoin in the world, it's capped, so that means it's deflationary. Will 21 million Bitcoin really be able to host the entire human race?
Well, my personal opinion on this is that it will not, and it doesn't need to be this way, because Bitcoin is by far the best store of value there is.
What does that mean?
It means that if, one good comparison is that Bitcoin is also called gold 2.0. which means that gold is, well, considered as the best store of value there is, but it's a physical, right? And then how to transact with the gold bars, for example. So, but you have stocks and stuff that is centralizing and then do we really have this amount on your wall that you claim to have on but Bitcoin, you have it because everything is on blockchain. And as you said, it is a limited supply. 21 million will be, the first Bitcoin will be mined 2140, April, I believe it was. And then every 4 years, the mining, the coins per block will be cut in half. And next year we will have another one, which means that the supply will be less and less all the time.
Yes.
And the store of value comes from this philosophy that there is limited number of this asset in the markets.
Yes.
And there's no other market that actually, there are no other asset that has like 100% sure limited supply. Bitcoin is the only one. And now it's also understood by the big money guys in the world, like BlackRock and these guys.
Yes.
So, and that is, Bitcoin is there on this particular role. And it is, to me, it's a one function coin, one function crypto to me, and that is store value. And there are also arguments, and Bitcoin can be something else, but we don't need to have Bitcoin on any other role than this particular role, because it is best on this particular role, store value.
Yes, and I think in trying to not be technical here, but in economic, slowing down to economics theory, a store of value is where there is high demand for something. When there's a capped supply of it and demand continues to exist, value appreciates. That is under the assumption that demand will continue to exist. Of course, if demand stops existing, it doesn't matter if it's there's less supply. If demand doesn't exist, they will just move to another network. But we assume that demand will continue to exist after the halving even more, because of the fact that it's the most decentralized cryptocurrency in the world.
The production is the most decentralized.
Yes.
How centralized is the ownership is the other thing.
That's, yeah.
But again, we need to, well, the number that is quite confusing if you think that this will service the entire world as the store value.
Yes.
There is this one mechanism which is called, and one Bitcoin can be divided and is divided on 100 million pieces. Satoshis, we call them.
Satoshis.
So, and most of the transactions in the future will be done in Satoshis, not Bitcoins, because Bitcoin, one value of one Bitcoin can be, I'm this 1 million guy, 1 million believer. So, but that's a starting point. It's a starting point to go even higher. Well, hopefully I live that time when it's going to be 1 million. It's not going to happen soon. But nevertheless, there's a mechanism thought that you can transact with the Satoshis. 100 million Satoshis is one Bitcoin.
Right. So this is what could allow the ability for Bitcoin to be served as a legal tender, because El Salvador has already made it its legal tender.
Yes.
So to answer the question, Bitcoin and Satoshis will be able to host the entire human race?
Oh,
it's a tough question, I know.
Bitcoins and Satoshis they don't need to be in this role, because let them be in the store of value. There are better mechanisms for example, transacting the value faster, smoother,
Yes.
everything there is, and one of them is already today deflationary.
Which one?
Ethereum.
Of course.
and I explain, if you don't mind, and the audience don't mind, how this kind of asset they're produced all the time, more and more units come to the network all the time, to the markets all the time. How can it be deflationary today? There's a mechanism when the transactions will be completed on Ethereum protocol. The base fee of every transaction will be burned, vanished, taken away for good from the blockchain, from the world. And when there are more transactions, when the blockchain will be more active, the transactions, the burning, the transaction fees, the base fee comes more value more than the production, and this is kind of in the middle now. We have days and weeks and months that sometimes Ethereum is deflationary, sometimes a little bit inflationary, and we are in bear market. When we go into the bull market, Ethereum will be 100% deflationary asset.
But will the base fees increase as a result, and will that discourage members from wanting to use the Ethereum network?
Well, there are other challenges come to the picture, but that's kind of only comparing the deflation or inflationary asset.
Fair enough. So yeah, of course, that's a challenge that remains to be addressed. People don't like to pay fees. I don't like to pay fees. That's why I use Tron.
Yeah, and I disagree.
Go for it.
But first of all, we need to understand that these decentralized platforms, they don't function if people will or part of the platform. They must be rewarded.
I know.
And then again, how much and
that's
that's a question. That's a question always there. But again, how this, for example, Ethereum ecosystem have been architectured. We have the layer 1, and we go into bull markets. The transaction fees can be unbearable. So high. But you don't need to use that. You can use layer 2 and soon layer 3s, which practically you don't pay anything or almost anything. You pay almost nothing on the transactions. The gas fee is so low, and transactions will be very fast. So these are you can position yourself on different kind of role. And again, to me, for example, there's a chance that someday Ethereum, first of all, it will flip as the biggest crypto in the markets. It will flip Bitcoin. That's how I believe, because Ethereum is so big on it's on every business there is in the world, and soon every household, I believe, but not every, but quite many. And then this is the moment when Ethereum role will be more again as a store of value, because the 1 unit is very valuable, and then price increases because of this burning mechanism. Even the product producing more. So, and again, we should not worry about the price and the gas fee, the transaction fee on Ethereum layer 1 protocol itself. Let's build something on top of that, like layer 2s and layer 3s, and our application.
Minimize the fee.
Exactly. And serve your community as well they expect to be served.
One thing to note is that if you're going to minimize the gas fee, whatever solution that may be, does that also mean the validators get less rewards?
That's right. But then there's a good point. But think of this: it's not the unit price of the gas fee, transaction fee. It is the size of the community, the size of the ecosystem. That's why they can come down really, really, really low. If the community grows, ecosystem grows, and that's the whole thing. If you summarize everything that there is on blockchain, it needs to be as decentralized as possible. Technology needs to be as solid as possible. Test it, and then you only succeed. You only succeed if you have a big, committed, continuously growing community.
Right. I think that makes sense, because if the community can all agree that we will prioritize size growth and the happiness of our community,
and it's more secure, and it's more secure. The bigger the community, the more secure it is.
The more secure it is, because also more validators as well.
Exactly.
But yeah, it is, when it comes to the money is a zero-sum game. What somebody else's loss is someone else's gain. So if we cut the gas fees, you're going to cut the wages or the rewards of validators. If you're going to raise the gas fees, you're going to reward validators. That also means if I send you, let's say 500 cash worth of Ethereum, I could be paying 1,000 or 200 gas fee. Yeah, 200 for sending 500.
That's the case. Yeah. That's the case. In bull market, that's the case.
But this is a challenge that remains to be addressed. And okay.
Again, let me... Yeah. Because when the bull market will be there, very little of normal people will transact.
That's true.
On Ethereum.
Yeah.
It is a big money platform. The 2 biggest ones are big money platforms. Whatever you think, whatever you say, you said, okay, there's also Satoshi transactions. You don't do Satoshi transactions on layer 1. you use also Bitcoin layer 2s on that for that.
Going back to the Satoshi and setting Bitcoin as being able to serve an entire human race, could you see yourself living in a country like El Salvador or in a country that makes Bitcoin its legal tender?
Absolutely.
And so you could see yourself paying bills in Bitcoin?
Well, cryptocurrency, yes.
Okay, not necessarily Bitcoin.
Well, that was my answer. Cryptocurrency, yes.
Okay. So it could be Bitcoin, it could be Ethereum.
Well, as long as it is solid, as long as it's been tested, as long as it's been there for big number of people many years. I'm advising these small projects, early gems as we call them. Many of them will be very good. Actually, I'm quite picky. I believe my projects will be good.
Yeah.
But and they will have a role. But when it comes to this entire kind of society, country-wide thing, you cannot have. You have a software company. It serves your 10, 100, whatever companies, your customers. These small platforms will have this kind of role in a society, but they transact on blockchain, and they will be rewarded on cryptos, and the customers will pay. Most of the time, they will pay on the this platform token, which can be converted that time on the major cryptos, because we don't have fiat anymore that time. That's how I believe it is. It will be. So this is, we need to understand that this also the blockchain. When we're talking about huge decentralization, big communities, and these kind of things, that's the key. But a big community can be, to some protocol, it can be 100 nodes, even less than that. But as decentralized, as controlled by the community itself, customers, users, validators, and that's this kind of different decentralization we'll have in a society, because now we have the same on centralized world.
Yes.
We have small companies that are running one server on the corner, they have 10 customers and so forth. So that's how I believe the future decentralized world will look like.
But the difference with the dollar is that it can always be printed, so that ensuring that everybody can always have the dollar or the pound or whatever currency it is. And whereas with this, going into a cashless society with just Bitcoin and everybody transacting Bitcoin, do you ever wonder or ever reflect on the old days, if this was the case, the old days when cash was there and you could put cash in a safe box and have it there for a rainy day or whatever? Would you reflect and say, I miss the cash days, and I wish we would, I think there's still a place for cash to still exist in this Bitcoin tender world?
I believe the dollar value has dropped. I don't actually remember how long period of time it was and is, but it's dropped now 98%. So
it's too far.
But it's generation after generation. But that's what you got on that time, and you compare what you get now. That's the inflation rate. So almost like 100% lost its value. And how they're printing it now it's dead end for the fiat money.
Yeah.
But again, we also need to understand that not all the cryptos have these mechanisms that some protocols, even big protocols, they print.
Yeah.
They don't have total supply, for example. But then I hope that they understand that they need to have mechanisms that they are not inflationary.
Yeah.
And only those cryptos that will have a mechanism to be deflationary. But it needs to be balanced again, because sometimes it affects another mechanisms that are hurting the protocol itself. But it needs to be balanced. We need to get out of this money asset printing mechanisms. Bitcoin is there already. Ethereum is already. They are good for good. They are good for good. But then other ones need to understand this is what we need.
Critics might argue that they want their privacy when it comes to transacting certain things, and that's up to them. We have the likes of many things online that people like to transact and do their things. I'm sure we both know what we're talking about. And I'm just wondering, because Bitcoin is so, and other cryptocurrencies are traceable. They're they're immutable, they're traceable, they're unpenetrable. Anybody can track your online activity, your online transactions, if they went into the Etherscan, for example, or the equivalent for another cryptocurrency. Does cash play a role in privacy?
Well, yes, because the most money laundering and terrorist money, that's cash, like 99.99%.
Correct.
This is, again, if you think that those people who are attacking cryptos, attacking Bitcoin, Ethereum, everything, they use this one argument that it's hidden money. We don't know who's transacting there, and that's just the opposite. Cash is hidden money. You cannot you can give your bill to the guy and nobody else knows that.
Nobody knows.
But Bitcoin transactions can be tracked, and there are huge criminal organizations being caught because of the transacting on Bitcoin or Ethereum networks. Only because of that. But I also believe that there must be mechanisms. For example, if this, as I believe, this will be the future of the internet, future of communication, future of content transactions in hopefully soon. Personal data, healthcare data, all these kind of things, they need to be secure, they need to be private. So we need to have mechanisms that secure this privacy on the protocols.
On the protocols.
And that's coming up now fast.
Okay, good. One blockchain network that already does this is Monero.
Yes.
Monero, XMR for its ticker symbol. And it's completely untraceable on the blockchain, and it's designed that way. It's a privacy token. It's a privacy blockchain. But there are, of course, it has faced its own share of consequences with that, being delisted from major exchanges because banks cannot cooperate with them, governments cannot cooperate with them. What do you make of that?
Well, again, first of all, good point. Cryptocurrencies, blockchain, this Web3 phenomenon, when you get in there, we cannot be isolated island from the society. We need to collaborate with regulators, lawmakers. We need to collaborate with them. But everybody needs to understand the benefits what this underlying technology brings to everybody, to the entire society. This thought in mind, we develop this enough privacy for these kind of things. But then it's not easy because you need to decide and define what can be fully private, what cannot be fully private. And if it's a decentralized platform, it's because the bits and bytes, it's just the data. It is not easy. But I also believe that because we have the most bright minds, the best brains in the world working in this technology, that we will get in there. If you think the early phase of internet, I started my first online company in '94, so internet was a little bit different than today. But if there's a need for a solution, and the best programmers, the brightest minds are working on it, we will have the solution. We will have the solution for that.
There could be I'm just envisioning, thinking aloud here. There could be a system in place where you can transact in Bitcoin or Ethereum or any of the major cap. There's a way you can set, a smart contract that says this stuff is private. It's private. It should not be able to be tracked or traced by governments. Now, I can already predict the response by governments and lawmakers saying, no, we want to see everything. We want to have surveillance over anything. How can I be sure that this transaction is not illegal, or you didn't purchase drugs, or you didn't purchase blah, blah, blah? And that is that remains a challenge to be seen.
Right. And if the counter argument this is, all right, guys, how it functions today.
Exactly.
Yeah. So and if you have this like open mind on thinking these problems that we want to solve, the problems what we have today, using decentralized mechanism, benefiting everybody. And again, there's nothing, and it never will be anything 100% fully decentralized. Yeah. There are mechanisms on the protocols and systems that are fully decentralized. But when we go to end, the whole ecosystem, there are centralized elements, but there are decentralized elements that can control decentralized elements in a way that it is proven case. That's why, for example, your identity, my identity, everybody's identity can be one day on blockchain, and we control that.
We control that.
Yes.
That is our right.
Yes.
That is our property.
Yes.
That is our privilege. It shouldn't be a privilege. It should be a right.
Exactly.
We can agree on that. Okay, very good discussion. I want to talk a little bit about cryptocurrencies and taxation now. So the IMF, the International Monetary Fund, recently published a report titled Taxing Cryptocurrencies, which suggests a global crackdown on crypto revenues and income. So they're looking to tax cryptocurrency activities, including mining, which it considers carbon intensive. So this looks like they are trying to focus on the wealthy first, and then the rest of the population, everyday people. My question to you: should cryptos be taxed?
Yes.
Why?
Because the society doesn't work other way. So if this will replace existing monetary financial systems,
Yes.
and systems needs to work, society needs to work, people need to pay taxes. But how do they pay it? First of all, it goes to the kind of philosophy of this everything. Your token and coin on one type of protocols, it's utility. You give benefit to that. It doesn't work without your token and coins. It's securing the transactions, validating transactions on the protocol itself. Your token and coin, your asset. As long as it's there, it should not be taxed. It is utility there. But if you withdraw that, then it's income to you. And what's the difference there from that point that you actually deposited there to give benefit to the decentralization, to the blockchain, the ecosystem itself, and then you withdraw. These are the two trigger points that needs to be there to understood, and that's where you pay the tax. And it also needs to go other way, because sometimes we don't know what the value will be in the future. Sometimes you pay more to get this, or you paid more to get this token before you deposited it. When then it's lost for you. Then it's lost for you.
Lost, yeah.
It's lost, and you should not pay tax for the loss.
No.
So and it's kind of no-brainer that again, if we start from the thought that this will replace existing monetary financial systems, we need to pay tax.
I guess so, because tax is what allows the country to be run on. How else can bridges be built? How else can healthcare be served? I understand that from that perspective, because I'm a contributing member of the economy. I pay my dues. I pay my bills. In the UK, it's deducted before you can even take it.
It's no-brainer, right? But let's hope that we don't have these commercial banks anymore.
Yes.
but as long as we have it, we again, the whole thing, and I believe that when we have more of these politicians, regulators who understand the benefits of decentralization, it is so much better economy on these kind of systems than existing ones. And then again, you can build the entire working functioning society on these decentralized platforms. Again, nothing will be fully decentralized. But then getting benefit of decentralization as much as needed, as much it will develop further all the time, and everybody benefits.
Agreed. A good thing that at least in the UAE, we don't pay taxes.
We do pay.
We do pay. I'm just...
Don't tell anybody.
We do. It's hidden. Okay. A question around interest rates and store of value, because they're both interlinked. Bank of England Governor Andrew Bailey said that they raised interest rates by about 50 basis points because the economy was strong. Heads of central banks in the US, Europe, Japan, and UK also made public statements about raising inflation and interest rates even more. This has consequences on the cost of living and the cost of borrowing. With these rates up, cost of living up, does this have a direct impact with crypto holders wanting to store more money in crypto or in the US dollar?
On crypto.
And why is that?
First of all, because it is the end game has started. So it's this kind of money printing. You don't need to be an economist to understand this.
Yes.
That's like normal thinking.
It erodes value.
Yeah. Well, that's if the assets come more and more to the markets, the unit value decreases. and then it happens also to the how much you can get from this asset if you buy something or use it for something. And then, for example, now when the US just raised their debt ceiling just like 1 month ago or something, in 1 month they have printed, just checked yesterday, they printed $1 trillion more.
1 trillion with a T.
With a T in 1 month.
But with inflation rates going up, the cost of living will go up naturally. Will people have to now convert their cryptos into fiat to pay for those higher cost of living?
Well, again, society works with fiat money still. That's as simple as it is. But well, not simple, but that's
just
the
way it is. We're still dependent on banks.
But again, these are so big questions that the future will tell. Yeah. And again, how big depression, whatever depression we have, if we have a depression. Yeah. But again, the money printing will not stop. That's the fact now, and we need to have some sort of some sort of system that replace it. It doesn't happen overnight. It's gradual change, So one thing I want to clarify, because I believe quite many people already have heard about this central bank digital currency already, and how CBDCs and how governments, central banks are marketing it. They're marketing it as digital money,
yes,
which is totally opposite to crypto money.
Totally,
and they print it the same way. It's the same printing mechanism.
Same printing, just digitally.
Exactly.
I know. There's no difference. Well, there is a big difference. They can delete your money.
Exactly. Printing wise, it's the same, but then they have access to your personal money.
Personal money. Access to your personal money. That's the most scariest thing. Will it kill financial freedom then?
Yes.
Yes. We have to leave it there, Pekka.
Thank you.
I want to say, Pekka, thank you so much for your time.
My pleasure, Adel.
We're going to wrap it there. Thank you for watching. We delved deep into some jargon terms that are being thrown around in this space.
We clarified gas fee.
We did clarify that. And I want to also say you have a YouTube channel.
I have, yes.
What's it called?
It's Papa Blockchain Web3 Uncut Education Channel.
Fantastic. I want you to go check it out. Pekka, thanks again so much.
My pleasure.
And I'm Adel Burton. Thank you for watching, and we'll see you next time.